Bitcoin plummets below $67,000 amid intensifying sell-off and growing doubts over its core function. New York, New York, February 5, 2026. Bitcoin, once lauded as a resilient digital gold and a unique store of value, has experienced a significant downturn, sinking below the critical $67,000 mark on Thursday. This sharp decline signals an intensifying sell-off across the cryptocurrency market and underscores a growing pessimism regarding Bitcoin's fundamental utility among investors. The cryptocurrency's recent performance has sparked a reevaluation of its role in a diversified portfolio, particularly as it continues to underperform traditional safe haven assets. Steep decline and market contagion. The cryptocurrency's drop below $67,000 marks its lowest point since November 2024, pushing its weekly losses to 20%. Earlier on Thursday, Bitcoin breached the key psychological level of $70,000, which analysts had been closely monitoring as a crucial support. The failure to hold this level triggered an accelerated selling spree. This recent slump is part of a broader, 3-month steady decline, leaving Bitcoin more than 45% below its October high of over $126,000. The broader cryptocurrency market has not been immune to this downward pressure. Ether, the second-largest cryptocurrency, has pulled back 23% this week, marking its worst performance since November 2022. Solana also experienced a substantial hit, reaching a 2-year low of $88.42 on Thursday, down 24% for the week. This widespread decline suggests a systemic shift in investor sentiment across the digital asset landscape. Erosion of digital gold narrative. A significant contributor to the current market malaise is the growing skepticism about Bitcoin's purported function as a hedge against inflation and macroeconomic uncertainties, or an alternative to traditional safe havens like gold. Despite earlier claims, Bitcoin has largely traded in correlation with risk-on assets such as stocks, especially during recent geopolitical and macroeconomic upheavals in regions like Venezuela, the Middle East, and Europe. This correlation directly contradicts its digital gold narrative. Indeed, Bitcoin's performance starkly contrasts with actual gold, which has surged 68% over the past year, while Bitcoin has fallen nearly 30% in the same period. Furthermore, its adoption as a practical payment method for goods and services remains minimal, further diminishing its perceived utility beyond speculative investment. Deutsche Bank analyst Marian Labor noted that this steady selling in our view signals that traditional investors are losing interest and overall pessimism about crypto is growing. Institutional reversal and liquidity-driven market. Adding to the pressure is a notable reversal in institutional demand, which had previously been a significant price driver. CryptoQuant reported on Wednesday that institutional investors, particularly U.S. exchange-traded funds, ETFs, which acquired 46,000 Bitcoin this time last year, are now net sellers in 2026. This shift indicates a withdrawal of large-scale capital that once buoyed the market. The market is also grappling with the impact of forced liquidations, where traders' positions are automatically closed as Bitcoin hits predetermined price points. Over $2 billion in both long and short cryptocurrency positions have been liquidated this week, exacerbating volatility and contributing to the downward spiral. Maya Vujanovic, CEO of digital assets at FG Nexus, highlighted this change, stating that Bitcoin isn't trading on hype anymore, it is trading on pure liquidity and capital flows. This perspective suggests that the market is currently driven by short-term trading dynamics rather than a fundamental belief in long-term value. Critical support levels ahead. With Bitcoin having broken below its 365-day moving average for the first time since March 2022, a more severe decline than the early 2022 bear phase, analysts are closely watching the next potential support levels. James Butterfill, head of research at CoinShares, emphasized that the $70,000 level was a key psychological level, and its failure suggests that a move toward the $60,000 to $65,000 range becomes quite likely. CryptoQuant echoed this sentiment, pointing to potential downside toward the $70,000 to $60,000 range, following the latest leg lower. The current environment suggests a challenging period for Bitcoin as investors reassess its promised benefits against its real-world performance and market correlations. The intensifying sell-off, coupled with diminishing institutional interest and skepticism about its functional role, casts a shadow over the immediate outlook for the world's largest cryptocurrency.